find yourself first. And then if business acquisition is the number one thing that will get you there, I firmly believe in this investment thesis if you're willing to do the work. Like, we've done it a bunch of times and it works, but you got to do the hard work. That's really good.
For sure. And I think like not knowing is a totally acceptable answer. My pushback would be there are smarter ways or cheaper ways or faster ways to find out what you want. Because here you're signing up for a 10-year personal guarantee. If you find out in 2 years that, like, one of the things that we see is you work some cool white collar corporate job, you chat with all of these, college educated, overly ambitious, hard driving colleagues or vendors or, fill in the blank. And then you go and you're like, HVAC. HVAC is where you make money. I'm going to buy an HVAC business. The guys on an HVAC crew could not be more different from the fancy attorneys or whoever you've been dealing with the past 5 years. They're no better or worse. They're just different people.
Welcome to the Exceptional Companies Podcast, a podcast for purpose-led entrepreneurs looking to master the art of buying, selling, or optimizing small businesses. Your host, Chris Seegers, founder of Exceptional Companies and author of Selling Main Street, has over a decade of experience starting, buying, and leading successful businesses. He's here to guide you through the complex world of business transactions and growth. Each week, we dive deep with actionable insights, expert interviews, and real-world strategies to activate and equip you to live exceptionally and build exceptional businesses. Now, let's dive into today's episode. Here's your host, Chris Seegers.
Welcome to the Exceptional Companies Podcast, where we discuss how to buy, grow, and sell small businesses. I'm your host, Chris Seegers, and I'm joined today by Will Fry. Will is going to be a really interesting guest because we're talking about how to capitalize acquisitions, which is a focus area that I love, that I've been involved with a long time. And I think there's not enough creativity in that space. So Will, welcome to the show, brother.
Thanks so much for having me, Chris.
Yeah, absolutely, man. You guys bridge the gap between capital and small business acquisition, and the goal being to help make efficient deals happen in that space. So let's back up a little bit and tell me about you and how you started this business and who you guys are helping now.
Yeah, happy to. So kind of quick origin stories. I grew up in Eastern North Carolina, a town called Greenville. And there you kind of do one of three things. You either work at the hospital, you work at ECU, or you own a small business. And so kind of small business economy was always near and dear to my heart, ranging from my mom owned a small business, a bunch of our family friends, so on and so forth. And so it was like same businesses who sponsored Little League, who, the Veterans Day Parade, all that stuff. Fast forward about, 20 years or so, and I was working up in New York. I had recently kind of decided that had learned all I was going to learn at the job I was at, and I was ready to start something again. And so I had moved back to Eastern North Carolina. Reason being is I wanted to build something that had a bit more impact than what I've been involved with recently. And so what I did was I hit up a bunch of our family friends and asked if I could just come shadow them while they did whatever the hell they do. And so one has like a family-owned farm. They do like a bunch of tobacco farming. And then another had like an auto shop, so on and so forth. And what I saw was what you know very well, and probably your listeners, just the kind of succession problem smacking me right in the face. And to kind of back up a little bit, for centuries or since people started businesses, typically your kids are going to take them over. And in the US, I think one of the cool parts about our country is that you can chase whatever your dream is. And if you're good at it, you get rewarded for it. But what that means is that like kids are moving away. They don't really come back. They don't want to run the business, yada, yada, yada. And so like Greenville is a town of, I don't know, when college is in session, maybe 90,000. But when college is out, a little bit smaller. And so like most of the kids move to Wilmington, to Raleigh, to Charlotte, wherever. And so a lot of folks are just like, I don't know what I'm going to do. And so I ended up starting a modern take on a business brokerage about 5 years ago called Beacon. And we were helping a bunch of folks go through that journey. And what we kept on running into that was really frustrating is that some of the folks that we thought were best equipped from a work ethic, skills, fill in the blank, to actually like lead the business into the next generation were the ones who didn't have capital. And then the ones who do have capital, they don't want to work, they want a passive investment, or they think they know what they're doing, but they buy the business and everyone quits because they're like telling some guy who's done it for 20 years how to do his job, and they're 2 weeks in the business. And we saw at the same time that private equity was coming down market, and I'm a red-blooded capitalist for sure. At the same time, I don't want the entire country to be owned by like Blackstone and KKR. And
Yeah,
so,
absolutely.
we started Main Shares to really help back the individuals acquiring these businesses and unlock capital. And then we have another of other kind of services and ways that we get involved as well. But I would say definitely access to equity capital is the primary thing.
I love that, man. And you laid out that problem so cleanly. So we have folks that are, reading social media posts and quitting high tech, high finance jobs and saying, I'm going to buy a HVAC company. And then you have folks that actually do the work, right? And we always say, hey, the work's to do. The work's always to do. Like, you got to do the work. And that bridge is becoming a lot more difficult on the debt side for sure. So SBA and conventional banks have just said, hey, we've had some default on these loans that we didn't expect. And when they went back and looked at it, they said, we probably should have qualified the buyers better. Not they had the right capital stack, they had the right, debt to income ratio, all the things financially that worked. But the thing they didn't have was that willingness to hop into that business and learn it. And also maybe the disparity between you've worked white collar service your whole life and now you got to go do something that's not that, a micro dirty's job. And if you aren't willing to actually go and learn the lingo and learn the people, like, you can run those things into the ground pretty quickly. So I love that you guys identified that. And we've got a couple businesses right now that we're talking through similar issues where we've got great buyers and the banks have said, hey, maybe this isn't a fit. And so using folks like you is going to be a good option. So tell us a little bit more about what you do, how you structure things, and then some of your better clients or success stories.
Yeah. So we kind of break our business down into three things: training, capital, and support. So on the training side, we have a community called the Main Shares Network. It's free to join. We're not, charging you $9.99 and selling you our ebook or anything like that. And in that community is kind of three things. There's a bunch of free course material that's actually good. Like, we invest a bunch of our own time and money into putting together. We have tests to make sure that you actually are following what we're saying. And so that allows folks to kind of get up to speed on what it means to acquire a business in a very realistic, maybe even borderline pessimistic outlook on, like, this is what it actually entails and this is how things can go south. We have weekly events ranging from, an owner of a business kind of giving an industry deep dive to someone who's recently acquired doing an AMA. And then the third thing we have is a bunch of current owners who help folks look at deals and once they close, kind of advise them. And so that's kind of the training piece. We do that for free, and we don't do it for free because we're a charity, but selfishly, our business is really hard when we meet someone who's really great who comes to us with a terrible deal that's completely upside down. And so we're not magicians. We can't work miracles. And so what we want to do is educate as many people as possible on, like, how do you do this the right way, so that if they do need equity capital, we can, knock it out of the park and help them achieve their dream. And we're not sitting there saying, like, hey, Chris, sorry, man, but there's no way this thing's going to work out and we can't really help you. So that's on part one. Part two is on the investing side. So we've been involved in probably around $140 million worth of acquisitions this year so far, around $60 million of equity capital going into those deals from our end. And then normally folks may bring in some friends and family and other folks along. We typically put in $250K to $1 million of equity capital. Some of that comes from our balance sheet, but the vast majority of it comes from a network of around 2,500 accredited investors, family offices, folks who are both passionate about the financial product, which is like, hey, you're getting this kind of blend of income and upside, but also folks who are passionate about small businesses and asset class, and they want to be long, so to speak, Main Street America. So that's the second piece. And then the third is, once the deal closes, our team gets involved on transition planning, quarterly updates, quarterly books, distributions if they decide to do distributions, and really just kind of being there to almost like a kind of a traffic cop, insofar as, like, we'll have someone come in and say, hey, we're running the XYZ issue. What should I do about it? And we are never, hey, we're the expert, we know everything, but normally we know someone who knows someone who's an expert. And so we try to be helpful in that way.
I love that. Okay, so let's back up a little bit. As you think about financing small business acquisitions, if you could give us like 2 or 3 main areas that you're like, hey, it's always these 3 things that are high level. Like, all right, if we think of a funnel for vetting due diligence, three things you're like, hey, you guys, if you're bringing a deal, you need to make sure that these three or four things or one thing looks great.
Yeah. Yeah, I would probably break it into three things. I would say like number one is operator business fit, which you kind of alluded to earlier.
Mm.
You don't need to have 10 years of industry experience in the business, but we need to have indicators because we're putting our own capital at risk with these deals. It's not like we're just like clipping fees and hawking it to random folks. So we take this very seriously. We want to have indicators that you have a decent amount of risk tolerance. So you've done something entrepreneurial before, and you have a decent amount of pain tolerance because it's going to suck oftentimes. Number two is that you have some mix of managerial and finance experience. And I don't mean finance in the private equity Wall Street sense, but you understand how a P&L works, you understand how a balance sheet works, and you manage your personal finances decently, you're probably going to manage the business finances decently. And if you don't, you're aware of that and you're like doing things to compensate for it. And I think the third is on the industry side. If you are buying a business in an industry that you know a little bit less about, the indicator we love to see is you've convinced someone from the industry who's owned for 10 or 20 years, who isn't a family friend, because that's great, but that's kind of cheating, to come in on the deal. Maybe they're investing a little bit, maybe they're getting some advisor shares, and they're putting risk tied to you succeeding. That's like, all right, this person is humble and aware enough that they went and sought help, and they are credible enough that they convinced someone who really knows their stuff to back them in some way. So that's kind of been like the operator business fit bucket. I would say the second one is like deal structure, which is annoying because we always encourage folks like, don't get obsessed with the buying. Like that is a how, and that is a race to a starting line. And then everything else kind of comes from that. At the same time though, you can't set the deal up upside down where you're like massively overpaying or there's some like crazy customer concentration risk and the deal structure doesn't allow for any breathing room. Because typically what we see on the back end is most of these acquisitions do a J curve where things come down for a year or two before they start going up. And even when things go up, typically revenue is going up, but expenses are going up quicker than revenue is. So you're actually making less profit the first year or two. So we want to know that there's like some wiggle room on the deal for things to not go well, because something won't go well. And then the third piece is someone who's like very pragmatic about what they're going to do once they close. So I'll give you like a good example and a bad example. The good example is someone who's like, hey, business typically has done like no marketing and sales. Based on this industry, it's sales, it's not marketing that's going to grow it. I know to hire like a good account executive or good door knocker, it's going to be, $60K a year base plus this bonus. And it's going to take them 6 months to start turning a profit once we factor in their salary and their commission. And so this is kind of like how the business will probably look in a year. Bad is someone who's never bought a business before, never run a business before, coming in and telling us they're going to roll up everything under the sun and that all the returns going to come from buying 10 businesses a year and then this crazy exit multiple increase on the back end. And it's like, look, I'm a dreamer. I'm an optimist. That's why I'm in this business. But like, let's also be a little bit realistic on, we need to walk before we run.
Yeah, for sure. And I mean, with small businesses, the value creation, once again, is in the doing. Yeah. It's in the operations. It's front office, back office. It's sales and ops. Like those are the levers in every small business that if you don't know one of those really well, like you're going to fail. And I agree with that. We actually just had a conversation, and with our team, I said, hey, we actually need to focus on discouraging people from buying small businesses, not to actually discourage them, but to really put them through the ringer, probably the questions that are in your content to really qualify, is this right for you?
Yeah,
I think the opportunity is incredible, but not for everybody. And so I love that buyer assessment to understand, hey guys, the deal might be great. And you're like, hey, you're just not the right buyer for this deal. And we've said that multiple times. Hey, we only represent good businesses. This is a great business, but it's just not a fit for you. Like, let's go find a fit for you. But we also want to make sure that those people are going to do the hard work. We've got quite a few folks that have been really successful, and we've got some folks that didn't take some of our counsel, that bought a business that was not the right purchase price or terms, that now instead of 12 to 24 months, they're 5 years, right? They're digging out of a 5-year hole. And that we hate seeing that. Okay, I love that. So give us a little more about the avatar of who should come to you guys for equity. Like what's a really, and you talked a little bit about, hey, it's somebody that is going to do the hard work, that has a little bit of capital, but maybe can go find a professional to ride alongside with them. But give us a little bit more about that perfect fit for you guys.
Yeah, what we like to see is someone who's, has some real world experience, is entrepreneurial, is thoughtful, and is relatively realistic about what they want to do and self-aware. So
what would realistic look like? Because I think that's a really big demarcation point where people are saying, go buy this for a 2 to 3x, and then you're going to make this amount of money in 12 months, and then you're going to be passive in 24 months. Like, what would a realistic assessment do you think look like for a small business, say $500,000 to $1 million EBITDA that somebody's buying?
Yeah, I mean, I think there are kind of two things at play. One is, should you own a business? And then the second one is, should you buy a business? And I think some people jump all the way to the second one before answering the first question. And so before we even get to the business piece, you need to be willing to potentially spend 12 to 24 months looking for a business to buy. And you need to be willing to sign a personal guarantee on a loan for that business. And you need to be pretty confident that's worth it and that you're going to be successful. Mm-hmm. And so the stats that we see is around, I think 49% of folks who say they're going to buy a business are going to buy a business. Now, in reality, it's probably a lot lower than that, but that's kind of like already screened numbers. Of those, 39% actually do it within 12 months. So like the vast majority are not going to transact within 12 months. And so we want to know that you have some like grit there. Once you go into the business side of analyzing a target, I want to know that you know what success requires in the space, that you know what the landmines are, and that you have analyzed the finances. And I would say like the two or maybe three things that are common red flags for me personally is their projected growth rate is insane. Mm-hmm. So like sometimes you'll have businesses that grew 20% year over year the past 3 years. If you project 20% year over year for the next 10 years, you are going to be one rich person. In reality, these things jump up and then they kind of slow down. And so if the business has been growing 20%, but the industry's projected to grow at 1.5%, maybe let's pick a number closer to the 1.5% as kind of like our go forward assumption. I would say the second thing is that there's a lot of like hidden costs, so to speak, in running a business, like acquisition aside. When you grow, you actually make less profit. It's not linear because you have more money tied up in working capital. Like you have to outlay a bunch of cash for bigger purchase orders, your accounts receivable goes up, so on and so forth. Additionally, like trucks and equipment, like you have to invest in that. That doesn't show up on your profit and loss statement. That's a CapEx item. And so you're using cash and converting it into assets that you need to run your business. You don't need to be like a financial wizard, and this stuff isn't rocket science. But if you at least kind of like, even if you chat with your typical owner, they may not call it working capital, but they understand the mechanics of what's happening on the financial side. So I think that's important. And I think the third is the kind of operator fit. So like if you're buying a business that's $1 million EBITDA, depending on the industry, that could mean they have 10 employees. That could mean they have 100 employees if you're in like wholesale or retail. If you've never managed one, jumping in at 100, I mean, you're going straight to the deep end. And so we try to do some of that where it gets a little bit more qualitative for sure. And that's why we make decisions. There's like a group of us on a committee. It's not one person just kind of bull in a china shop.
I love that, man. And I think like having an accurate, clear assessment of the current reality and where you're going. That's what we help people do. We call it the blueprinting system, like having the right blueprint. And I remember reading, there's a book by the Koch brothers called Good Profit, which is a really good book, but they were like 12% growth. That's like our high end target for any business we buy or own. Like if we can hit 12%, we're going to, we'll double in 7 years or less. Yep. And like when I remember reading that, because we were in oil and gas pretty heavy at that point. I was like, man, 12%, that seems so low. But then when you get into small business and you see the ups and downs, and like you said, the reinvestments, if you can make 12 to 15% year over year over year over year, you will make a lot of money and build a lot of enterprise value.
100%. And I think the other thing there is like, if you hit 12 or 15%, we're not telling you it's impossible. We're just saying, let's not set something up so that you have to hit that to stay alive,
For sure.
So like, if you see the difference between like what some of these operators who are a little bit, eyes wide open, their financial model they send us, and then what we end up sending out to our investors, it's like, it's a little night and day in terms of how we forecast things out.
I love it. A question that we love to ask our potential clients is, Do you know what your business is worth? And if you sold your business today, would it fulfill your personal and financial goals? If you're a successful business owner, but you don't know when or how to sell your business, and if you've ever wondered what each additional day in your business is actually costing you, we'd love to chat. If you're ready to spend more time with your family, your friends, or traveling, come sit down with our team, because when you work with exceptional business advisors, we'll help you build a blueprint to sell your business successfully and help you create, capture, and achieve your dream life. Don't wait for the right time. The time's now. Go ahead and scan the QR code or book a discovery appointment at excoadvisors.com. Okay, so let's dive into a little more specifics. What's a success story or a couple success stories from this year, last year? And give us, if you can, you don't have to talk obviously names or anything, but like industry, here's an industry, here's the size of the deal, here's how we capitalized it. This is where they're at today. Give us some examples of what you guys have done.
Yeah, sure. I have one that I can talk about like a lot more publicly, both because I know the details and Joe has been open about it on other channels. And then we can chat about one that's more recent that I'm a little bit less familiar with, but gives you a sense as well. So around this time last year or 11 months ago, we helped a guy named Joe Solberg acquire Point B, which is they were doing about, I want to say like $4 or $5 million of branding and marketing work. It's a branding agency based in Chicago, Illinois. They are pretty interesting because they land their clients with branding work, and then all of their other SKUs that they offer, so like promotional materials, marketing spend, flow from typically either a rebrand of an existing customer or an existing business or a brand launch. And then it's like, okay, now we need to go get that brand in front of folks' eyes, whether that's printing menus for a restaurant or running, ad campaigns. He is kind of like the quintessential type of person that we like to work with. His kind of background is he'd been working in the marketing industry for about 15, 20 years. He had actually acquired a business in 2018 that was 3D design for like physical products and animations. And so he knew branding is different for sure, but he knew like how an agency typically works. Like, do you do cost plus pricing? Do you do retainers? What are your payment terms? How do you deliver really good customer service? And so the jump from Sonny and Ash, which is the company he bought in 2018 or 2019, to Point B in 2024 wasn't like a huge leap. And he had managed, Sonny and Ash is a good bit smaller, but he had managed a couple people before. And so we were like, okay, we feel pretty comfortable trusting Joe at the wheel. His deal structure, unfortunately, would be pretty hard to pull off nowadays because of recent SBA changes. But the business was owned by 3 partners. One owned, I want to say like 96%, and then the other had 2% stakes each. So he bought out the 96% owner. The other 2 folks rolled over. And so he needed around 10, 15% of the purchase price in equity. And so we were able to fund that for him from a group of, I want to say like 9 or 10 investors. And then, we've been in touch with him ever since, whether it's helping out on like the working capital side, because the business has actually been ripping the past year. He sends out like monthly investor updates with financials. And so we're able to kind of like analyze, okay, this is what's going on. This is what we could tweak, and really just kind of be a thought partner with him as he grows the business. And that's what we like to do, which is like, even in our case studies on the website, like it's not Main Chairs did X, Y, and Z. Like these are human stories. That's part of what attracts investors, is like you need a base return to be interested. Like this is not a GoFundMe project, but at the end of the day, it's really about like backing the operator, their story, what they want to do, and you want them to win and their story to kind of carry the light. So that's one that we are a bit more involved in. That also followed this typical structure in this space, which is participating preferred. So you as investors, let's say, to keep numbers super simple, it's $1 million deal. You put in 10%, so you put in 100K. You then get a preferred return on that 100K. And then once the company pays you back your preferred return, that 100K, you'll typically get around 20% of profits in perpetuity and until they buy you out. So it gives you a little bit of like, hey, Joe wants to make some distributions because that preferred return is accumulating. It's not free money. But at the same time, the preferred return is in like 20%. So if he can grow his business by 15%, that's more than the preferred return. Everyone should be incentivized to reinvest in the business. And so that's kind of how these are structured. A more recent one that I wasn't personally involved with, but the team was, I really like the story. It's a Marine Corps veteran buying a security business out in Sacramento. And the cool part about that business was that most of the investors coming into it were fellow vets. And
Nice.
so he was by no means like a financial wizard or a M&A deal guy. He knew the security space. He had some buddies who had started companies like that. And he was going to make a really good operator. The owner really liked him. And so he was able to bring in investors who could kind of round out his skill set from vets who've been out for 10, 15 years. They've worked in private sector. They have a bit more dialed in on the finance side. They could also open doors on the BD side. And so we like instances like that where it's more than just capital. And the folks who are coming in with us into the deal are increasing your chances of success.
Yeah, for sure. I love that. Those are really good. Okay, let's go a little bit different. What are some areas related to business acquisition that social media has got wrong, or ones that you see recurring? And we talk a lot about it on this podcast, mainly because I don't want people to lose. Right? It's kind of Warren Buffett's thing, like don't lose a dollar. I don't want you to lose your house because you bought a bad business, because you watched this thing and did this mastermind and, like track it back to you. You saw this post on social media. But what are some misconceptions that you've seen or just some fallacies?
I think like anything, there's no easy money. There's no such thing as easy money. And so I think that there's a wave of folks who've cropped up past handful of years. And if you go back in time, they were selling cannabis products the year before that, and crypto the year before that, and drop shipping on Amazon the year before that. And we probably all know their names. But you kind of have to like double click on how do they make money and why are they doing what they're doing? Why are they dumping $10 million a year into Facebook ads? And the reality is they have no skin in the game. It's kind of like the Nassim Taleb thing. Like they're not principals. Mm-hmm. They have no risk. And so they're not going to tell you the truth. They're going to tell you what gets you to click on the ad and pay for whatever stuff they're hawking. And I think the upsetting thing to me is, I guess, two things. One is that there are a bunch of people who have gone through these courses or boot camps and are now BK. They've gone bankrupt, and we know some of them, and they should have, at the very least, never structured the deal that they did. And more likely, they probably shouldn't have bought a business or tried to chase entrepreneurship. Like, I think the hustle porn or the obsession with this, like, get rich quick deal making isn't great. And typically, if you look at a lot of the folks who fancy themselves deal makers, they end up like bankrupt or in jail. Like the best deal makers don't think of themselves as deal makers. So I think that's kind of thing one. Thing two that we've witnessed, and I imagine you may have some anecdotes to share on this as well, I'm curious for your thoughts, is that the wave of I'm going to get rich, silver tsunami, buy a business folks have made life a lot harder for the individuals who are trying to do things the right way because they have tarnished the reputation of individual buyers. Brokers are way more skeptical of them. They're worried they're tire kickers. They're worried they can't close on the deal. They're worried they're going to try to do a colonoscopy for due diligence and never really be serious about buying. And so you have this wave of folks who are frankly going through like a self-discovery, what I don't have meaning in life, or I'm trying to figure out what I want to do. And they're using biz buy sell inquiries as a way of figuring that out. And then that means that for folks like Joe or Eric, who are like serious operators, they're not messing around, they get lumped in with the rest of them from the broker's perspective and the owner's perspective.
Oh my gosh, dude. That was so well said, Will. Don't try to find yourself by buying a business. Right? Like that is the worst possible, one of the worst possible ways you could find yourself. We've got two tools, and one of them is called the Clarity tool for that exact reason. And we give it to both sellers and buyers. But the goal is before you talk about whether buying business or real estate or anything, you should know, what do you want out of life? Like define, we use the exceptional word in all of our businesses. What's your exceptional life? How do you define that? Like how much money, how much free time, how do you want to spend it with your family, your friends? What does legacy look like? Like you need to put that on a piece of paper and it to be true. And what I mean by that is we have a lot of clients that will bring in that Clarity tool. And then I start poking on it and I say, okay, you say you want to do this, for example. Hey, you say you want to golf, you want to golf for the next 20 years of your retirement. You're 72. How many times can you golf a week before it starts hurting? Well, twice. I'm like, okay, that's 8 hours. So what are you doing with the rest of your week? So really just pushing into people, or people that are just like, I want my time back. I'm like, cool, me too. But what are you doing with that time? Right? People generally, we always see four things, and people should define these. You want freedom of time, freedom of purpose or impact. So, doing something that you find fulfilling, freedom of relationship, and freedom. Oh, what's the fourth one? Oh, freedom of capital, freedom of money.
Yeah.
It's usually when people are talking about this, but I want it to be really defined specifically to that person where it's like so true to them that then they know, oh, and the business is going to serve me. Buying a business is the one thing that's going to serve me to do these things. Awesome. But most of the time they're going to be like, actually, if I buy a business, then I'm going to lose my time for a year to 3 years. Yep. Never mind, I have young kids. I don't want to do that. I'll stay in my high finance job. So I love that, man. Don't try to find yourself through business acquisition. Find yourself first. And then if business acquisition is the number one thing that will get you there, I firmly believe in this investment thesis if you're willing to do the work. Like we've done it a bunch of times and it works, but you got to do the hard work. That's really good.
For sure. And I think like not knowing is a totally acceptable answer. My pushback would be there are smarter ways or cheaper ways or faster ways to find out what you want. Because here you're signing up for a 10-year personal guarantee. If you find out in 2 years that like one of the things that we see is you work some cool white collar corporate job, you chat with all of these, college educated, overly ambitious, hard driving colleagues or vendors or, fill in the blank. And then you go and you're like, HVAC is where you make money. I'm going to buy an HVAC business. The guys on an HVAC crew could not be more different from the fancy attorneys or whoever you've been dealing with the past 5 years. They're no better or worse. They're just different people. But some people get there and they're like, I am so alone. I don't connect with anyone at work. I don't connect with any of the fellow owners because they started the business. They didn't do this for like, oh, I'm going to use an SBA loan and get rich quick. And then they move for the business and they're alone. And it's like, no, you wouldn't wish that on anyone.
Yeah, for sure. And I wrote a book called Buying Main Street, which is like a book you read on an airplane. The reason I wrote this is because I was tired of potential buyers wasting sellers' time. Yeah. And in the book, I just say, look, there's another human being on the end of the line that is trying to map out their life, right? And so when you're just coming in here and wasting their time because you don't know who you are, like that's such a disservice to that person that has spent 20 years building this amazing thing. And there's qualified buyers that are ready to buy this thing, but there's so much noise. So I really push hard to say, hey, you need to know who you are and what you want. And then at that point in time, let's have a conversation around what do you need? What type of life is going to serve your personal, your wealth, and your business goals? That's really good. Let me ask you, what have you loved most about getting to work with so many investors? You've talked a lot. I can tell you're mission focused. You do things different, which is our approach as well. What's been some of the things that have been awesome on the investor side?
That's a harder question to answer. I find the owners and the operators a lot more entertaining. I think if I'm being honest, I'll tell this to the investor's face. I think the ones that are most exciting have an existing small business that they run or they're involved with. It could be a family business. And they want to find a way to diversify their wealth a little bit and pay it forward. And those are the most rewarding to work with because they're really realistic. Like they're not looking for this 35% IRR. Like everyone knows those numbers are normally not going to pan out. It's like someone's projections. And even if we brought them back down to planet Earth, Lord knows it could be higher, it could be lower, like basing a whole investment decision around some number that, you have no true control over hitting, maybe not the best approach. And they're way more of like, okay, what do the business's current financials look like? What does the owner do? What is this person who wants to buy it? What have they done before? Kind of chat with them and see like, do they read books? How have they come up to speed on the industry? How do they think about life? And then it's like, do I have something to offer this person to help us all make more money? And then normally they're like a smaller check than a family office or something like that. But they're super fun. And like, for instance, we were involved in a deal a couple years ago where a guy was buying a landscaping company up in Albany, New York. And one of the investors he got was a big commercial property guy there. He was actually able to, like 1 month after close, move a bunch of their maintenance contracts to Michael's landscaping acquisition. So that was like really cool where it's like, okay, sure, maybe they didn't come in with millions of dollars, but they actually probably created way more value than some of the more silent, larger checks.
I love it. So we generally try to go for kind of 30 to 40 minutes. So I'll wrap up with a few questions. Let's start with what's a tool, a book, a podcast, a resource, something that you give to either you choose like business acquisition folks or somebody on the capital stack side, but just in 2 or 3, whatever. But what are the things that have been game changers on tactically how to execute on this strategy?
That's a good question. I'll give one answer, and then if it's not what you're looking for, I can retake it. Mine is ReadWise. I don't know if you
Okay.
use that.
Huh.
So what it does is it ingests anything that you highlight in a news article that you read on your computer or phone or Kindle or
Interesting.
whatever. And then as soon as you read it, it reminds you the next day, then 3 days later, and then it's kind of like exponential back off. It helps me
Interesting.
like retain way more content that I take in and is like searchable, all this type of stuff. So it's like $9.99 a month. I have no stake in the company. I get no kickback. But if you are a reader or audiobook or podcast person and you're like, I listened to that 6 months ago and I forgot whatever they were talking about, I highly recommend it.
I love it. Okay, so let's push into that with the second question, which is, what would you be reading on that you would use ReadWise to capture? What would be the top 2 or 3 books that you're like, hey, these things will help you dramatically?
One is The Score Takes Care of Itself. I think it's a phenomenal book by Bill Walsh. And then I end up reading like a lot of history. Like history always kind of repeats itself. So The Piece to End All Peace was something I recently read. Napoleon's biography I thought was super fascinating. I typically stay away a little bit from like more contemporary stuff, mainly because like the dust hasn't settled yet. So like let's give it some breathing room before we decide they're great or not so great. And then I think like on the business acquisition side, I think Buy Then Build is A, I'm curious to read your book, and I definitely will. B, I think like Buy Then Build is still like a pretty good primer on like you want to jump into the space, understand how it's structured. I definitely start there. And then I'd just nerd out on the industries and the actual operations. I wouldn't go too crazy on M&A math.
Yeah, 100%. I love that. Okay, so 2 final questions. One is, where can people find you and interact with you professionally, whether it be social or your website? And then if you could share a final piece of wisdom and optimism. And I've been closing with this because I think there's kind of a lot of negativity around, oh, this country's not working and it's so hard and inflation has made it difficult. And I totally don't agree with that at all. I think the opportunities are even better than that. But where can people find you and what's some closing wisdom?
Yeah, for sure. So I'm on LinkedIn, my name, Will Fry or William Fry, I forget how I'm titled up there. On Twitter, I'm Buy Sell SMB. And then you can come to our website, mainshares.com. You can check out our YouTube. And then we're like very open doors. So if you're ever in Austin, we're on South First, 2810 South First, swing by. We have a huge come and take it flag, which kind of shows our ethos. On the optimism and advice side, I would say 2 things. One is don't do it alone. And the second thing is find your why. On the don't do it alone side, we have a board member of ours who actually encouraged us to do this. We went out to all the folks who we sold their businesses at Beacon, so like 5 years ago, and we said, hey, this is what we're up to at Mainshares. This is the mission that we have. Do you want to get involved in some way? Every single one of them is like a pro bono advisor to folks who've acquired businesses with us now. And I think it shows exactly what you're saying, which is like your average 60, 70-year-old guy is going to complain about the direction of the country, blah, 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 blah. But like, they don't actually want to be pessimistic. Like, they want to find people who work hard, who care about the American values, American dream, and they want them to succeed. And if you just ask for help, so many people want to help. Like, they don't actually want to just complain all day and, sit on the couch. And so I would say, like, don't do it alone. Find people out there who could be helpful to you and ask for help. And then when it comes around 40 years from now, pay it back. And I would say the second thing is to find your why, which I didn't expect us to hit on as much. And really cool about the assessment that y'all do. But I think it's lonely, it's confusing. The future is like, it's super cloudy on certain days. And if you don't have a really dialed in why, you'll just give up and you'll be miserable. And you got to know what that why is. And so I think that's what I'd say.
I love it, man. That's such a great place to stop. Will, thank you so much for the time and for coming on the show. We'll have you back again because this is a really interesting topic, and we'll catch up with you down the road.
Yeah, we're mission aligned, so we're rooting for you guys, and thanks so much for the time, Chris.
I love it. Same, brother. Take care.
All right. See ya.
Thanks for joining us this week on the Exceptional Companies Podcast. Make sure to subscribe to the show on iTunes, Spotify, YouTube, or via RSS so you'll never miss a show. While you're at it, if you found value in this show, we'd appreciate a rating on iTunes, or if you'd simply tell a friend about the show, that would help us out too. If you like this show, please reach out through our website, www.excoadvisors.com, for free tools to order a copy of Selling Main Street, or to sign up for our free webinar on how to sell your Main Street business.